All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we are happy and grateful for each and every one of you being here with us tonight as we take a look at the technicals and the fundamentals in the Forex market to see what we can take advantage of. And today was definitely a busy day in regards to price action. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. And if everybody can hear me loud and clear, please drop me a 1 in the chat and we can get things started. Awesome. And let me make sure that everybody has control over their microphones. We just asked, as always, if you're not asking a question or making a comment, let's do our best to keep our microphones on mute. All right. And okay, I think we are all set. All right, so let's move right on over to the Forex factory. And we know that the big report today that was coming out was the CPI report. So everybody was waiting, seeing what inflation was going to come in at, and we can see that it came in slightly above forecast. So the market is still red hot, okay? Still red hot, still a lot of concern globally about this inflation thing, and we saw the markets definitely react. Now, I guess a little bit of silver lining in regards to inflation is that compared to the previous month, it rose at a slower rate, but it still rose nonetheless. So everybody's kind of looking for where that top is going to be for inflation before it just starts to make somewhat of a larger decline. But slower rate, but still inflation is running red hot. So we can see here we had a forecast of 0.2%. It came in at 0.3. Core CPI 0.4% came in at 0.6. Okay, so inflation is still a major challenge, and it's I believe it's going to continue to be, but we'll see if the rate starts to creep down a little bit as we go over the next several months, especially headed into the next Fed meeting. So the market's just looking for, hey, looking deeper into these numbers. Okay, good. The rate's slow. Let's see if we can get it to continue to slow and eventually turn over and go in the other direction, especially as we approach next month with a very hawkish Fed to make sure that they remain kind of subdued. Hey, only give us 50 basis points, not 75, right? So that's what the market's kind of looking out for. But let's go over and take a look at the dollar index, right? So we know that overall inflation, hey, still a monster, okay? Dollar still pushing up. That's your monthly look here. We go down to the weekly. We can see continued strength for the week. And if we click it, we head on down to our daily chart, you can see that it's pushing up, right? Still pushing up, but moving a little bit sideways now as we come into the new day. So we see that it gave us a slight correction, being that there's a little bit of a reaction that, hey, it did come in over forecast, but the rate slowed. You saw that initial reaction, and then you saw it push right back up. And now as we move into the Asian session, we can see that it's just slowly trudging along, a little bit indecisive, right? But we're in an Asian session, so kind of expect that. So that's where we are. Inflation is still red hot, as many suspected. Okay, but everybody's looking for that level off point. Any questions in regards to that CPI that came out today? Hope everybody had a chance maybe to take a look at the charts prior to the session, follow along. As you can see, it kind of whipped around a bit, which is why we kind of like to be hands off and see how things play out first. And then once things kind of some of the volatility kind of settles down, maybe look to see what the next move is going to be. So we're going to try to do our best to get through as many charts as possible tonight, just to take a look at our markups coming from Saturday to see exactly where they are in regards to the price action as we're now Wednesday evening. So Ryan, how are you, sir? All right. So let's start out taking a look at the Aussie. Oh, so I want to, if you use a smart trader, we'll take a look at smart trading and we'll take a look at trading view too. If you want to look at like how we have the dollar index, and we've been talking about doing this for a while. I forget who brought it up in the group. It was a Donette, or I can't remember, a while ago. Forgive me for forgetting who had brought it up about how you can actually, maybe it was Desi, can't remember, how you can see how we have the dollar index pegged against the other currencies. You can also look at each individual currency, like the CAD index. You can look at the Aussie index, and you can see the currency individually, right? So if we come here and we look at the Aussie index, to find that, you just go and you type into your symbols, X, right? So AUDX, CADX, JPYX. Okay, if you want to look at the Australian dollar index, the Japanese yen index, the Canadian dollar index, right? The pound index. You can look at them, just put in the symbol, right? In this case, AUD, type in the X, and you'll be able to pull it up. Okay. When I'm on trading view, right? How many people in here use trading view? Drop me a 2 in the chat if you use trading view. Okay. All right, cool. So if you go over to use both, okay, I do too from time to time. If you go over, one of the things that when I was really using TradingView way back when, I used to look at the futures contracts, right? It gives you the same price action look. So if you want to look at the Australian dollar futures, okay, which will give you, like I said, a similar look, you could go in and you could type in 6A1 and then the exclamation point. And so if I wanted to do that for the CAD, right, you just put in 6C1 with the exclamation point. Same thing with the yen, okay, Japanese yen. Okay, you can do that, all right, define that. So this is the Australian dollar, and you can look at the futures, and you can see, right, it's pricing to the downside. It's the other basket of currencies. Right. So sometimes it's good just to look at things from another view. I mean, the way we trade, you can pretty much tell. But sometimes if you want to just single it out and take a look at it, see what it's doing, you could do it there as well. We also know that we could come over and we can map out our technical summaries on investing.com, and we can see that for the most part, we're short across the board. Right. We have some time frames where you're still in the buy, right? The longer time frames, which that makes sense. But you can see that Aussie is selling off because we're in a bit of a risk off scenario. Okay, risk off scenario. So we look at the VIXI. Okay, few data points, right, that we like to take a look at. We can see it's still up slightly above 20. Okay, on the VIXI. So there's still some concern out there. It's shaky right now. Lot of moving parts. A lot of things that we're taking a look at fundamentally that's affecting the market right now. Okay, so those are just a few little things to add to your game. Any questions on that?
Yeah, hi Benny. I was just curious. What's the difference between indices and a future? I don't really understand that concept.
Well, you're looking at the futures contracts. That's we probably should do a lesson on it, but just to make it short. So you look at the future contract. It's a legal contract to buy or sell something at a predetermined price for delivery at a specified time in the future, right? You see it a lot. You see it a lot with commodities, right? You can see it with currencies as well, with futures contracts, especially, right? So if you think about it, a simple example, if I'm a big global international company, right, and you're doing the currency exchange, if you're projecting, hey, this currency may appreciate further in the future, maybe I want to nab that, get that price on that currency right now to lock it in. You get what I'm saying? Simple example. We need to do I'm gonna write that down, a lesson on that.
Well, see, what I don't understand, I know a lot of the U.S. brokers don't, the regulated brokers don't do indices, and so, but then I hear
Right.
people say, well, they trade futures, which is like the NAS 100 and US 30 stuff like that.
Mm.
So I don't
Yeah,
understand how they do that.
yeah, it just it depends on your broker and your setup. Some of your brokers are straight. It depends. It just really depends on if they have it on their platform, right? So I don't really trade them. I don't really trade these indexes or anything like that. I look at to see where the price action is at to help me with my bias on a particular currency. But that all depends on the broker and what they allow on their
Yeah.
platform. Some traders use offshore brokers that allow them to do it. Like there's U.S. brokers, right, that don't allow you to trade gold on the spot market,
Okay.
right? Like you can. So it all depends on your broker. You just have to do the research and see if it's allowable. But that's really the difference is what's available on the broker's platform as to whether or not you can trade that.
Okay.
Yeah.
Thank you.
Yeah. Oh, you're welcome. Good question. But you kind of use this, right? If you need you need some extra confirmation, always look at multiple data points, fundamentally and technically, just to kind of back up what I'm seeing, what my technical eye is seeing. So these are just a few things that can help give you a little bit of an edge in the game. So yep. Any other questions before we continue on? Hold on one sec. What's going on, Ryan?
What's the deal, bro? You all right?
Man, I'm doing great. It's Wednesday, hump day, right? So
Hump day, man.
get through it. A lot of movement in the market. A lot of movement in the
Definitely.
market. Yeah. So rocking and rolling. But I tell you what, through all of the mess, the one thing that I can say that's always tried and true is that Fibonacci sequence, right? And we'll see. We'll see as we go through some of the things that we marked up over the weekend that's in play. Like a lot of those Jenny crosses are moving, right? So those are kind of like the setups of the week, at least for me right now. So we'll take a look at those. Can you talk to us about, Ryan, a little bit this morning? You were talking about the oil embargo, right? How they had to have, I think you said, a unanimous vote.
Yeah.
Along with that.
So with the war in Ukraine, excuse me. So Europe gets approximately 40% of their energy supply from Russia. And specifically oil, they get 4% of the oil from Russia. So that's a large amount. And the EU, European Central Bank, they want to ultimately ban imports from Russia to have a major impact on the Russian economy, right? Ultimately, that's what they're trying to do from a financial perspective. They feel like if they can cut things off financially for Russia, then that will cause Vladimir Putin to change his stance and back off of the invasion of Ukraine. So that's where you've seen the a lot of the other things that they put in place with banning certain people, blocking, freezing bank accounts of major Russian officials and things like that. So with the oil embargo, ultimately it's an agreement between the European nations that they will not receive any oil and over the long term, any energy imports from Russia. This agreement, they're looking at this going into effect in 6 months, right? In 6 months, they want everybody to be off of Russian oil. And there are a couple countries that I don't have them off the top of my head, but there's 2 countries that specifically said their economy will be impacted too much. So they don't want to, they need more time to figure out alternative options. There's another country that is still in close relationship with Vladimir Putin. So they're saying, no, I don't want to do this at all. So with this agreement, all of the European countries have to agree. It has to be a unanimous decision to do it, or it cannot be done. So what they're going through the process now is a process of negotiation with each of these countries that are given pushback to determine how much time is needed for them to find alternative resources And then for the country that still has that strong relationship, I believe it's Slovakia. But what can they do to get them on board? So that's the negotiation process that they're going through right now. But a lot of the reports that I've read and investors are saying that the more they water this down, the longer it takes, or if they give additional concessions to some countries to not be a part of the agreement, then it lessens the impact that they're ultimately trying to have on Russia. So that's the back and forth conversation. The other thing that NATO is working to do on the back end, and you scroll past it on FX Street, Benny, but NATO is also looking to bring in additional countries to scroll down a little bit. Nordic members. Ultimately, what they're trying to do is surround Russia with NATO countries, because that's one of Russia's biggest things is the continued expansion of NATO, which they don't agree with. So on top of trying to ban the Russian import, they're also trying to surround Russia with NATO countries so that if these invasions do continue to escalate and continue to spread, NATO will have a stronger force to be able to combat the Russian military. Okay. So that's the big picture. That's where things are. But all countries in the oil embargo have to agree, or it's a no-go. So this could be drawn out for a little bit of time.
Yeah, I think so. Well, it's got to be unanimous.
Yeah.
Wow. Okay. I appreciate the update. I know it was important, so I wanted you to talk about it again this evening for sure, for those who might not have been on the morning call, because it's serious. It affects everything.
It definitely does.
So,
and think about it, right? Like because of the amount of oil that the European countries get, it's a major impact to all of them, not just one or two. So that's kind of why all countries have to be on board for it, because of such a major move that everybody will have to endure some impact from an economic standpoint.
Well, it's going to be some pain.
Big time. It's going
to be some pain. So at a time where inflation is already, rumbling at a pretty steady pace to the upside, even though it's slowing. So seems to be slowing, at least on the surface, but we'll see. I know we've got a PPI report coming up, I think later this week too. So thanks, man. Appreciate it.
No doubt.
Good deal. So let's tear through as many pairs as possible just to look and try to get some updates, and we'll start with the Aussie, right? So we'll go top down on these pairs, everybody. And if you have questions and things like that, feel free to stop me in my tracks, okay? Either in the chat or take your microphone off mute. All right. So if we look at the Aussie Cad, okay, two commodity currencies, but you can see that Aussie has been selling off pretty hard. Okay, we know oil, right? Iron ore, major commodity. And we know we've seen a little decrease in the iron ore prices as we got a little drop in demand. Why? Right? Because what's going on in China, the biggest trade partner. Okay, when you're talking about contracting instead of expanding, the need for some of those materials may tend to dwindle a bit, decrease in the price. And we know with Canada, right, economically pretty strong. They've got a pretty hawkish central bank coming out of Canada. They've already raised rates a couple times, looking to do it more in the future to help combat inflation. Job and labor numbers are pretty good, but at the same time, it's been bouncing around because of that oil price, right? Which I think it started to did it just start to pick back up today a little bit? Let me take a look.
Yeah, it did start to push back to the upside, to the top of that range.
Yep. So it's ranging, then it's coming off a little bit now. That's on the 4 hour. But yeah, started to rebound a bit and push up. Okay, and you see as a result, right? So we go back to the Aussie Cad. Even though they're both commodity currency, we see that one is clearly performing a little bit better than the other one right now. And you can see it's pushing down. So this week we've been bearish, right? That's 1 week's worth of price action through today so far, and we can see we're bearish. We're lower than last week. So if we come to the daily, right, we're coming right down into this key support level here, 89.97, and we can see right, we're getting a little bit of rejection there as we come into the new day. But look at that. That's just a nosedive there. Okay, bears took over. Okay, bulls tried to push it up. We were pretty indecisive previously. Look at that push up, and then right back down, close bearish, right into this support. So this one will be interesting to continue to watch. But in the meantime, right, this is why we say the fibs play out nonetheless. So this is your downward move, A, B, C, D. That's 1, 2, 3, 4. We're in our fourth fib sequence now to the downside as we come into the support, right into that D extension. That's it. All right, has been hit. Right? And we see on that daily candle, right, where we are. We've got a D extension hit right at key support. So eventually we'll get a new AB boundary here on the 4, which should already, right? We're coming into, here's that 4 hour, right to that D extension. And these are just your sub fibs running off of that C to D leg there. All of it is right in the same zone. So pretty soon that can continue to push. It'll take that 1.618 D extension out as well. And then we'll be looking for a new setup. But right now, just bearish, continue bearish, just how we drew it up on the Aussie Cad to the downside. All right, so that C to D move there is pretty much 120 pips. Getting closing in on the D extension. We'll see if it'll tap that tonight. So this one is still moving bearish. We're waiting for a new AB boundary to form overall coming off your 4. And then on your 1 hour, these sub ABCDs to the downside, you'll have a new fib there coming in as well here pretty soon. So no trade on this, no initial trade entry right now, just a wait and see. Okay. Any questions on the Aussie Cad? No?
I'm sorry, I have a question.
Sure.
So what time is your capital fib?
What time frame? It's
Yeah.
I'm coming off the 4. Off the 4. I took it off the 4. This is your most recent one here, off the high. Right? So we just came into a D extension here. So pretty soon, whenever this settles out and gives us a swing low, you'll have a new fib on your charts like this. Like this. Where we get that low to form, you'll have a new fib. And then we'll be looking for a correction and potentially a continuation down. Right? And then all I did was this 4 hour fib, because it was super clean, it's cleaner than the 1 to 1 was pretty choppy. I just took it here. I just brought it, traced it down here to the 1. And then you see that pullback, that same pullback up against daily resistance, and then that push down. So in essence, this is the same. It's the same look that you had on the 4 hour.
Are you entering on the 1 hour or the 4 hour, and is that a swing trade?
This is a swing trade. The C to D move is a swing trade.
Okay.
Yep. Now on that pullback, right, there's a position trade off your 4. Off your 4. Okay. Now that's something that you design in your trade plan, right? So you may position trade this to say, I love trading on the 4 hour chart. I only want to trade once I get down from my monthly, my weekly, my daily. I want to stop at the 4, and you could just enter off the 4 if you want to, right? If you're using sell limits and things like that, or even if you're waiting on a trend line break, once price hits your sweet spot, and you can wait on the trend line break, like so, or you can take it down and you can enter on the 1. That's totally up to you and what you're comfortable with, and what you're comfortable with on that, right? So you may say, you know what, I want to, based on how this price action, right, the steep move up, you may say, I want to go down to the 1 and get an entry, the 15 and get an entry. Once trade hits my sweet spot, I want to go down even lower than the 4. Right, that's totally up to you and your game plan and how you like to trade it. It's a little bit of a discovery process there, usually for most traders. Because it also depends on your lifestyle too, right? How often are you on the charts? Are you going to be there? Do you have your alert set for when that trend line breaks? If you're using trend line breaks and things like that, did you, for example, on this pullback to this zone, and you've got daily resistance, right? You can put an alarm on that level. You can put an alarm on there to remind you, send you an email, send you a text message that price has reached that level. And then you know in your head, just from doing your due diligence over the weekend, that that's a key spot for me to pay attention to. Right? So it all depends. It all depends. Mhm. Good question.
Okay.
Any other
Yeah,
questions?
this is an elementary question, but I'm new.
Yeah.
And so
Yeah.
the levels on the fib, all the, let's say the 2350, 618, they all go down to that last dash red line for take profit. Is that what you're saying?
No, it depends on the levels, right? So when you go through the course in the beginning, when we talk about the fibs, you'll definitely see it and you'll get it. So what's cool about these fibs is it color codes it, right? So
Right.
any one of these levels hit in red, it's a momentum thing, right? We always say these are like your energy trampolines. Okay, so your 236, your 38.2, your 50 to 61.8. We say, hey, price has the potential to have enough momentum to get to this 1.618.
Okay.
Okay, if you get a deeper pullback, right? So the higher you go, the less potential momentum back to the downside in the other direction in this example. So you got a 786 here. So the market takes back 78% of what it gained to the downside on the pullback. Then you say, hey, the market, I'm going to set my projection to my 127 extension.
Okay.
Yep, you get it?
Yep, I got it. Thank you.
Yep, you're welcome. You're welcome. All right, cool. Damon, you have a question?
Yes, sir. How you doing this evening, my man? Can you hear me?
I can hear you loud and clear. I'm doing great. How are you?
I'm well. Hey, I hope I'm not being too much of a disturbance here. I'm not new to this, but I'm definitely trying to perfect some things.
Mhm.
And I've been watching the videos and everything. And matter of fact, I'm just finishing up the Fibonacci, which I'm familiar with. But what my question is, I'm leaning more towards being a swing trader more so than an intraday or a day trader, just for the simple fact I have a 9 to 5 that requires my attention.
Mhm.
So what I've been working on and trying to figure out is obviously the 4-hour or the daily on the Fibonacci.
Mhm.
When you are doing your Fibonacci settings, is it best to go to the next level, or do you automatically grace, if that's the right word for it, maybe 50 to 100 pips in case it retraces back past, you know what I mean, your stop loss, different things like that? Because I'm trying to figure that out, because that's where my problem is, and I've been having a hard time trying to figure out how do I use the Fibonacci in the event of day trading, because that's a long day. So
Yeah, yeah. So we teach it two ways, right? Which is stop. The way that we prefer, especially in the beginning, is for you to put your stop above the A. Okay.
Okay.
Like this. That's your major high. Okay. And
Okay.
as long as price doesn't take out the A, it has no choice but to go your way. So
Okay.
is it a wise stop? Yes. And we always tell people, either find a way to put more money in your bank account, in your trading account, or just lower your lot size.
Okay.
Right?
Correct.
Lower your lot size, because you always want to divide, right, your risk, what's your risk amount, right, by your stop loss. That's going to tell you what you should be trading at.
Okay.
All right. So because we firmly believe that if the trade starts to go in your way, you can scale into the trade anyway.
Mm-hmm.
Right. So you might, based on your stop, you might only be able to take this trade at 1 or 2 micros, but as it moves in your direction and your balance is increasing, now you're on house money, you can just add to the position.
Correct.
As it continues to travel. So a lot of times people like to, especially depending on how you were introduced to the game, they want to use tighter stop losses. Right? They use tighter stop losses, and then the trade keeps pushing up and taking them out. And then they turn around a few days later and then actually went in their direction.
Correct.
Okay.
Correct.
We're not, because of the way we calculate our risk management, we know that we're making the best determination that we can where we want to enter, where we want to get out, and what our risk is before we even pull the trigger on the trade.
Correct.
Okay. Every single time, without a doubt. So I know that if I've got my stop here, okay, and I come in at this level, in this example where this trade reversed, right around the 61.8 zone, okay, where this trade reversed, yeah,
so you got 100 pips. Yeah,
that's 109 pip stop. But to see the fib and the way the math works is it puts you in, if you wait for trades to come to those sweet spot zones, right? Why we like to take those positions high in the zone is because it puts you in a proper reward to risk ratio automatically, right?
Okay.
Because that's a 109 pip stop, but to that TP, right, it's 260 pretty much.
Mm-hmm. I got you.
So I've got a decent reward to risk automatically, right? And then I can put my stop outside the zone to where it can dance around and do whatever it wants to do, right? Until it goes in my direction, or if it stops me out. But I should already know that if it stops me out, I'm at a 0.5%, 1/4%, 1%, whatever. You know, so if you're a swing trader and you work and you have a busy life, right? Which is why I initially learned it this way. Same thing, this is to me is the best way to do it, because you're just gonna let that trade float. You can click through your charts once or twice a day if you want to, or maybe not at all, because I'm protected. I know where my projected take profit is. Okay, all I have to do is check time to time, make sure, hey, take a look at it. Am I comfortable with everything that's going on? And let the trade run.
Gotcha.
But you can't be worrying about, it's like Ryan talks about all the time how traders, people was they act like drawdown is like just the worst enemy in the world. And it's not. Drawdown is a killer when you got your whole account tied up on one trade because you're over leveraged.
Correct. Okay.
You see what I mean? But if I'm in at 1%, 0.5%, I gotta blow 100 trades at 1% to blow my account up.
Correct. And that's what I prefer to do, is be at a micro lot than anything, a standard lot or anything like that. Okay, that makes sense. Another thing that I've noticed as well, I've been trying to get a hold of Casey, but she's hard to get a hold of sometimes. But I see that you and Benny are, Ryan are doing the Forex. Do you guys not get into indices or anything else like that?
Once in a while we'll check and we'll move. I think that's kind of like the next chapter. But every once in a while we'll go and check, have we traded them? Absolutely. Do we use the same methodology? Absolutely.
Okay.
But we'll go every once in a while and take a, to look at the US 30. We'll take a look at.
There we go.
Right?
There we go.
This is your S&P, right? We drew this up weeks ago, right? Ryan did weeks ago. Okay, mapped this out, and that's your S&P. That was coming.
Wow, like a glove too. Okay, gotcha.
Yeah, so that's just saying ABCD way, right?
Yep. Okay, got it.
To the downside. So yeah, yep.
No, well, thank you. And then my final question is, I have the rest of the year my account is on TradingView. Is the smart trader to get some of the tools and different things like that? Do you have to sign up for like the tier 2 or the tier 3 package, or can you get it at the basic free package?
I think Ryan, you want to speak to that? I think Ryan's more familiar with the updates on that and what's available at certain levels.
On the basic package, you get, I believe it's 2 smart tools that you can use on the screen at any time. So whether it be the smart trend lines, the fib, smart support resistance, what have you. So on any given chart, you get 2 smart tools that you can use. As you get some of the paid packages, that just increases the number of tools that you have the availability to, and some of the other features that they have that they have available. But you can use the free package and still be able to, if you just use the Fibonacci, which is the primary smart tool that you would necessarily need, you can identify with your eyes support and resistance, right? You can swing highs and swing lows. You can identify the trend line and draw that with the RAID tool or with the trend line tool. So you won't necessarily need those, but as you get a little bit more adept in moving through your process and identify some things that might help you a little bit more, you might want to look at a paid package depending on what your process is and what your needs are.
Gotcha. That'll work. Gents, I appreciate the 3 to 4 minutes of taking up y'all's time from teaching the others.
It's all good. You're asking questions of people thinking anyway. It's all
real
good.
quick.
It's cool.
Can I chime in on something?
Yeah.
Who was that speaking? Oh, Damon?
Damon.
Yeah, yes, sir. This is Damon here. Yes. Mhm.
Damon, you weren't the only one that made this comment, but I want everybody to understand. We got a lot of new folks with us. Understand that we created this community to help people learn this skill. So there's no dumb questions. This is an opportunity for us to help each other become better, right? There's no such thing as perfection. It's a fallacy that keeps people from taking action. So any questions that you have, and this is for anybody that has any questions. That's why we do these sessions, right? So that you can look over our shoulders and see what we're doing and ask the questions that you have that we know are going to come from the training that you're going through, right? We know there's going to be questions from those trainings, which is why we have these sessions Tuesday, Wednesday, Thursday, and then again on Saturday, so that we can be available to answer the questions that come from the training as you're, for Damon, for you, maybe unlearning some things and relearning some things. And for new folks that are just new to training altogether, you're learning a new skill completely.
Got it. Yep.
Learning a new skill is a process, right? And we created this community, we created the training, and we structured these live sessions in a way that supports the process as you move through learning the skills and the rules of this game we call trading, right? So no question is a dumb question. Everybody should be encouraged to ask every question that comes to mind so that we can get answers for you or direct you to the proper training module that will answer that question for you in detail and then give you some homework to follow up with, right?
Got it. Got it. Thank you.
So ask away. Don't preface it by wasting time, because it's not a waste of time. I don't want you to demean yourself. I don't want you to demean your questions or anybody else to demean their thought process and their being, right? This is a community and we do this together. So just a tip for everybody.
That'll work. Thank you. Much appreciated on the response.
Absolutely, man. Appreciate you.
I have one more question, and I'm not going to interrupt anymore either, but I was just wondering if you guys would foresee doing anything to address the FTMOs or funded trading, as all of you are funded traders. You foresee any classes or anything in that direction? Because that is my goal.
Yep. Ryan, you want to take that or no?
Yeah, that's a great question. That's something that we do have on our list of continued updates. We're just working on figuring out the best process and the best route to provide the insight that we have and structure in a way that you guys can easily move through it in a consistent way, right? So that's what we're working on, just the logistics of it. But that is something that we do have on future plans. It's just going to take us a little bit of time to really map out the best route we believe to walk each person through that process, from selecting the program that you go with to your actually trading process and the mindset that goes behind going through the process, depending on the company that the prop firm that you choose to go through, right? Because there's a different mindset based on the rules that they have. So there's a lot that's going into that. Because it's something that you really have to have control of, right? So with sound rules. So yes, it's coming. Short answer. Just going to be a little bit of time.
All right, thank you.
Yeah,
you're welcome.
That's a great question, right? Because there's a lot of different ins and outs, right, Ryan? With the different prop firms, and some of them you would say I'd rather just trade my own money. By the time when you break down what they're really providing you with in regards to capital, you're like, oh, I can just do this and trade my own money, and then there's some out there that are favorable that definitely give you a good opportunity. So yep, just taking our time doing our homework. We want to make sure that we put people in the right direction as much as possible. But the key word that Ryan said in all of that is psychology. I'd say 99.9% of those evaluations are weighed heavily on your psychology as a trader. So especially the ones with the time limits. So yep. So that is that's a long term one I had on there. That is the Aussie Cad. Great questions, everybody. And we will move on to this Aussie Swiss. Okay. So this one here, you can see it is just bouncing around, right? We've got a commodity currency versus a perceived safe haven, but we know what the Swiss National Bank likes to do with the with their currency, we know that they like to do everything possible for that currency not to appreciate, which is kind of tough during a time like this when it is risk off. But you can see that the Aussie has lost, right? So some momentum to the upside on it as of late, right? And it's pushed down, and now we're just bouncing around this support level, right? So when you see this on the daily time frame, it's been a good run, but look at that, just sideways right now, trying to make his mind up. Good fight going on between the bulls and the bears now, but this was strictly a range type play. Good move, but now it's just fighting it out. So as we move down through the lower time frames here, you look at your one, and take some of these off. Zoom this out now. As you look at your 1 hour, clear this off so we can see it clearly. You can see there was your break, and you move from the top of the range back down to the downside, and we've got it to hold up here at this daily support level. Okay, so no type of position on this now as it's moving sideways. Okay, within the AB boundary, potential for it to move down and break out of the range, but we just don't know yet. So this is not a trade that I would actively try to get a position in. It's made a huge move to the downside. Now it's kind of just stalling within the AB boundary. So we need price to make a decision. We need price to make a decision. At this point on the Aussie Swiss, if I were to trade it, I would like to see it break out to the downside or hit an extension. Then we'll look to play it, to the downside, whatever the market wants to give us at this point. But this has been a good move back down to support where it's gotten a reaction. So to me, for right now, that move is over in the range. There's nothing you can do with this moving like this here. This is just sideways, right? It's just ranging overall. We go back to the 4 and take a look at it. It's just a choppy mess. There's better setups to trade, is what we like to say. Better setups to trade. There was a nice trend short, and now it's just moving sideways, which oftentimes you'll get that after a major move like this. Any questions on the Aussie Swiss? That's a bearish to neutral play right now.
No, sir.
All right. Aussie yen, right? This is one of the yen crosses that we were talking about. And so we'll start this one back at the higher time frame, which is why we zoom out. So we see how price made those clean moves to the upside, okay? And if we zoom out a little bit, we can see the big picture and how we just came into a level. Oh yeah, that was a lovely trade for sure. And you can see the correction, and we just have to be patient. Just have to be patient. The market will give us the play. And so we've got this huge move to the downside. That's a weekly candle, so we're having a bearish week. If we come to the daily, we say, hey, we've got a brand new up AB Fibonacci. We know that it likes to make the huge where the boundary around that 118, 127 zone after a shallow retracement for a deeper correction. And right now, okay, we've broken through that 90.41 support level. And we're gonna see if we can tap that daily 382. But right now, we're right on target. If you go down to the 4 hour, we're gonna track the smaller waves. This is the move. A, B, C, potential D, right in line with the daily 382 there. Okay. So if you look at that play here from that green entry line down, that's 300 plus pips to your D extension, 527. Right. Beautiful move, beautiful setup. You just have to wait and be patient. Trade small, give your trade room to breathe. Let the market do its thing. Right? Let the market do its thing. All right. And then we look at the one where we can see where we got a slight pullback, right? To about the 50% mark, tap that 50, and then it dropped. So you're looking at the same price action, just on a smaller time frame, almost just like how we drew it up, but it didn't quite get to that 61.8, but got to the 50 and pushed down. That's all right, we'll take it. So we look for a continued downside move. So maybe price pulls back for a little while and then continues to the downside. But you do not, let me ask this question, right? Do we want to sell right here? Yes or no? Somebody.
No.
No.
No, right? No, we want a high price. Anytime we sell something, we want a high price, okay? If it's something that we own personally, we want to sell it for the highest price possible. We have to think about it the same way, okay? Same way. And when we buy it, we want it at a discount, the lowest price possible. So we don't want to make a place short right now. Okay, we just don't want to do it. But the key in all of this, everybody, is that what? We got the direction right. It's the first thing, which most people don't do, is they have a hard time getting the direction right. We got the direction right. The fibs help you with all of that. Okay, so we'll look to see if we can get that 382 on that Aussie yen. Hey, the yen is a safe haven. Think about how quickly things can turn, right? We know the yen has been taking a beating for weeks upon weeks upon weeks. We know that the Bank of Japan is, they doubled down on their loose monetary policy in regards to, hey, we're not raising interest rates, not one bit. We're going to let this play out. And you can see that, hey, the market shift to risk off, and money flows right into that safe haven. Okay, money flows. So now, right, we've got that Aussie selling off, a little bit of yen strength, okay, and we got this push down. So if we come and we take a look at, I have it on here. Yep, I've got this index, okay, for the JPY, and you can see, right, a little bit of a U-turn. It's been pushing down. We know the yen has been weak, and now you can see here on the daily chart, you've got a bit of a U-turn going on here. We're forming the bottom and a U-turn. So is this an ABCD? We'll see. All right, to the upside. Regardless of the asset class, what the situation is, the market's going to move in waves. So we'll continue to see if that yen continues to gain strength throughout the rest of the week in the current risk-off scenario. Any questions on this Aussie yen pair? Good. All right.
We're good,
Aussie, you good? Appreciate it, man. Aussie, New Zealand. Okay. Kind of bouncing around, two commodity currencies, Pacific Rim, trade partner China. Okay, trade partner China. Now, been pushing up. Right. New Zealand fell off. It was pushing up. The Aussie was pushing up against it. Now let's look at this move from the daily. Look at this ABCD move. We corrected to the downside. And now look, we're starting to gain a bit of momentum. Okay. So if you come here, look at where this is. Now, what I would like to see is, if I want to get long, I always like for this price to come deeper into the zone. All right. So that's why I had over here coming out of the weekend sell below 4-hour support at 101.56. There's the 101.56. It broke it and then it pulled back. So I ultimately would love to see this make this correction, but it may not. It may head to that daily D extension and rip to that 118, 127. If that's the case, then we just look to make a move here. But initially, I would love to see that push down, so then we could think about getting long at a lower price, at a discounted price. But we'll see how that plays out. It's just kind of ranging right now. I don't have a play on it, so we'll see. We know that from a 1-hour perspective, here's your correction. Right. See? So we got a good start to the correction. Broke through your inner trend line, broke through your outer trend line. Now we've got this pullback. So it's just a matter of whether or not from this 1-hour chart and this fib, if it wants to stay within this AB boundary and correct further to the downside, that would put me right on my target here at that daily 382. See, look, right? Put the daily, my 4-hour. That's what I meant to say. Should be a 4-hour 382 right here. And so I want to see this come down, right? Maybe it's pulling back. Maybe we can get it to push. That's the initial trade plan. So we'll see if it hangs out in the zone, okay, around this 110 level, and see if we can get it to continue down to that 4-hour 382 like that. Okay, another 95 pips away, and that should be Should say my 4 hour. 38.2, like that. So we'll see. If we push to a high price, it stays within the zone, maybe I'll look to add to the position if it holds. It looks like it wants to break hard back to the downside, but this one I'm still kind of just holding to see what happens. But right now, got a bullish candle going, moving long. Let's see what happens at this 110 area. But it may give us another high price and an opportunity to short. So keep an eye on that one as we go throughout the rest of the week. See if we can get that 382. Any questions?
Yeah, I'm sorry. I'm not understanding what you mean by a high price and a low price. What are you talking about, from the key level or from the trend line?
Right. So based on my fib right here, right? You see this 1 hour fib?
Yeah.
Okay. So this 61.8 where it hit already, this 786, this A6 in relation to this fib, these are my higher prices. You see this red zone here?
Oh, okay.
Yep. You see this red zone here? That's a very good question.
Okay.
So any time frame that you're making a play on, right? So this initial move was to the downside.
Right.
Beautiful. And now it's pulling back. You see how it's pulling itself back?
Right.
And it's given a high price. So for example, if you weren't on this initial break to the downside, oftentimes the price, it's going to take back some of what it gained.
Mm-hmm.
So you see this move here, this impulse move to the downside, and now it's pulling back.
Right.
Okay. But now we're kind of just, see how it's ranging in between this 110.15 and 110.42
Right.
level? It's just ranging. It's just a fight because you have, right, two commodity currencies going at it. All right, two commodity currencies is suffering from the same thing somewhat. So it makes sense for this to be in a range. So what I'm saying is, if it breaks through it and it continues to move up, and it gives you that new high and it turns over, it looks like it wants to break back to the downside, that may be a new high price for you to take advantage of it, right? Because at that point, the higher in the zone, the better, right? Because if I put my A up here, if I put my stop up above the A like that, right? If I get price to push up like so,
Mm-hmm.
say to that 8.6 level, now look at my risk to reward if price turns back over and it wants to get bearish. Okay, this was going to be a tough one.
Okay.
Right, this is going to be a tough one because of the type of currencies that they are and how they're closely correlated because of trade partners. But if you get a higher price, now look. So if I get up around this A6 level and my stop loss comes in here, right? Because my stop's still above the A, right?
Right.
Now, because I got a deeper pullback to this 8.6, now my take profit comes here to this 118 level. So
well, let me ask you this. Does that, the color of the red and the yellow, does that represent supply and demand or something? Or
this is just telling you your optimal sell zone.
Oh, okay. Okay.
Because that represents your high price in relation to the fib. So
Okay.
this is your sell zone. This yellow is your down push zone. This is your push zone. So this is that C to D move. So
Okay.
say price push back up here, then that's going to represent, if it turns over and falls short from there, then that represents my C. My C is always going to be my highest price within my AB boundary. Okay, my highest level. Right now, this is my C. See that there? See that high?
Right.
That's my C. So right now, based on this C, my projected D extension is actually here, 1.618. But if it pushes higher, then I adjust my C. So then it becomes real easy, right? My AB boundary is always set in stone. And the only thing that's ever going to float is my C and my D.
Okay.
Because my D is going to adjust, right? Depending on how far this price retraces. Okay?
Right.
So if I get an 8.6 pullback, then my D extension, instead of it being at 1.618 on this fib sequence, it becomes the 118, which is your green line, green to green. So now look at my, because of that deeper retracement, look at my reward on that potentially. See that?
Yeah, it's more.
Right.
Okay.
So I've cut down my risk. Price push higher in the zone. So now I've cut down my risk, and if that's continued short, then I'm in the optimal setup. So that's why I really like trading certain sweet spots, right? Like the 61.8, your 780, your 786, your 8.6. Okay, we like trading those because it gives us the nice deep correction, and then it puts us in an optimal spot in regards to reward to risk. See, if you're putting yourself constantly in those 3-to-1 type setups and you're being patient, yes, you trade less, but I don't have to win every trade to make money. If I'm in a 3-to-1, okay, if I'm risking $1 for every 3 that I make, I only have to win 3 out of 10 trades to take money to the bank.
Okay, well, I see. I was kind of looking at it backwards because I was concentrating on I thought you said it was the golden zone or something with the 618, the 50, and the 38.
You've been watching somebody else talk about the golden zone. Golden zone. Golden zone. That's somebody, some other YouTuber.
Okay.
No, they do.
I see what you're saying now, but yeah, I had it backwards.
Well, here's the thing. No. This is why it's called the golden zone. Let's put it like that.
Okay.
This is why. And a lot of times they don't explain why. Like, oh, this is just why does price react here? Why does the market eye up these key levels, especially on your higher time frames? It's because it's giving you, look at the reward to risk on that. That's a nice deep correction there.
Okay, you keep saying key levels. Explain.
Right. The 61.8, your 786, your 8.6.
Okay.
Key levels.
Okay, I got it now. I got it.
Those are our key levels. Okay. Especially in regards to the fib, right? So I think you're confused because you also hear people say key levels in regards to support, resistance, and structure.
Right.
Right. But we already have those marked. So if I take this off, because we do top-down analysis, you see this blue line here?
Yeah, that's your.
I already know that's a weekly level.
Oh, the blue. Okay.
All right. This is a 4-hour level. This is my weekly. So you see our red here, that's a daily level. Right. So we already know where our key levels, the key levels of structure are. Okay. So what's really cool is when you get a key level of structure, right? Especially higher time frame support and resistance combined with a Fibonacci level. Okay. Our 61.8, our 786, oftentimes you get a pretty good reaction somewhere around those zones. Okay. So yeah, so it's never just the fib level. We always look to see, is that key 61.8 to 786, is that coming in line with structure, right? Support and resistance.
Okay. Yeah, and the higher the time frame or the structure of the the bounce, I guess. Okay.
Yeah, it's just strong levels, stronger levels. What's considered to be a stronger level on your higher time frames.
All right, well, thanks a lot. They really cleared a lot up for me,
You're welcome. You're welcome. Keep working at it. Good question.
Okay.
Yeah. So we're in a wait and see, right? It's moving around, it's bouncing around. Okay, if we get a higher level, right, we might break and close back below. You see how we broke below it and came back above that 101.56 at 110 level here that we had noted. That's the level. And you see how it's playing around there. Broke it, pushed right back up, and it's bouncing around. So we'll continue to see. We'll continue to see. I already have a position there. So if it does push lower from there, that's cool too. All right. Any other questions on the Aussie New Zealand? No?
No, sir.
All right, let's take a look at this Aussie dollar. Pushing down. Look at that. See everything. All right. The higher you go on the mountain, the clearer it becomes. Look at that. It's a bird's eye view. we broke. Okay, we broke that key level. It's a mighty clean highway there. So we need to see if we're gonna get some sort of a pullback, which is typically what you'll get eventually once you break through key levels here. Okay, that's a monthly and a weekly level that it broke through. And right, it's just a perfect storm. You've got a very strong dollar because of a hawkish Fed. The reason why the dollar is so strong is because it's hawkish. Well, when the market is hawkish, everybody starts to become a little bit more risk averse in the markets. Okay, the economies, things getting super expensive. So then we shift the risk off, and the dollar gets even stronger because the dollar also acts as a safe haven. So the dollar's causing pain throughout the markets, throughout the globe right now. So here we are in this ABCD sequence. We've got a pause. We've already got a 50% pullback. So this is a prime example here on your daily. You've got a 50% pullback. Yeah, the fib level is cool, but look, right? Price is just going into our sweet spot, our sell zone. But look, we've got daily structure there, a daily resistance level, past support becoming future resistance. It broke through the level, pulled right back to retest the level, and it pushed down. Okay, pushed down off that level, 330 pips. Big moves, right? Some people have you thinking these moves, oh, it's rare that you can catch those moves. Not true. Not true at all. All right, so here we are on the 4. All right. And these are just sub-fibs running off of there, but I'll clear this off. And you can see this running down. Okay, drug this down. Look at that. Boom. Now we're just consolidating. Okay. Now we're just consolidating at the 127. It's made a long run. Okay, wouldn't be surprised if we got some pullback action and a continuation down. Don't know, but we don't want to sell from here. You want to hide. You want it to try to pull back on that pair. Okay, if we go to the 1, take a look at it. Here's that same fib. Here are the 1-hour fibs running off of it, smaller waves. And you can see how this is just a mess right now. See, that's just pushing sideways, can't figure out what it wants to do. It's been a long run. Okay, look, you found some buyers, then not so much. 69.20 level is key. So, hey, will it finish out and hit that 1 hour? Don't know. Will it start to pull back? Don't know that either. That's why we wait and see. Let the market make a move. Set your charts up. Let the market make a move in your favor, to your sweet spot, if you're not already short on this. If it's not where it needs to be for you to trade it, click to the next chart. It's that simple. Based on your trade plan, if you click on charts and the setup is not where you need it to be to put you in the area of highest probability, then you go to the next chart. That's it. All right. This move has been beautiful, over 300 pips to the downside. Now it's pushing sideways. As a trader, you make the decision. Oh, I have enough. I'm good. I'll take my money off the table. See you later. Okay. And when it finishes out, whenever it decides to finish this fib out, I'll look to see where the next opportunity is. Or take some of your money off the table, adjust your stop, secure the bag. So if the trade starts to pull back on you and you get taken out, at least you took a fairly large percentage of your money home. This is it. This is the game. This is the game. Took that from the 382 today. That's what I'm talking about. Getting it done.
Awesome.
Indeed. Indeed. So, great job. So that's the Aussie dollar. Any questions on that? But you can see how things are aligning, right? Just that's why we take a look at all the pairs. Okay. Cool. Yep. Any questions on the Aussie pairs in general?
think we're good, bro.
Think you're good? What, Ryan, what did you cover this morning? Did you cover the euro?
Yes, the euros and some of the pounds. So
Some of
probably
the
good to
pounds.
go to the pounds. Yeah.
Okay, I'm gonna check out these New Zealand pairs real quick.
Oh yeah,
Yeah. So right, we look at the index. Look at that. Down. Right. So let's see how it looks. Right. Let's see how that looks. NZD CAD. Whew. Look at it after that break. Okay. You got a break, you got a pullback. Retested that zone, still heading down. Look at that ABCD wave on your daily. That's now complete. Here's another example, right? Key Fibonacci levels up against structure. Okay, right here. See, look. Weekly, daily level. Look at that. Boom, up against the trend line. Right? We good. 562 pips to the downside. Okay. So it's been moving down. Okay. You have to hold for that long? Nope. You trade in and out of it. Do whatever you want to do based on your trade plan. But the key is you got the direction right. Look at this here. Hardly any pullback. Just tells you how strong it was. See, look how strong the momentum. Got good pullback, good strong pullback. Good strong pullback. Good strong pullback on this fib. Now look at the momentum shift. Right? Which you would get what? Steep trend lines. Look here. Only took back 23%. It went from taking back 78%, 86%, right? Almost 78% to look, only pull back. Bulls can only take control for 23% on that one. Bulls only take control for 23% on this one. That's just the momentum. And now we're closing in on another D extension. Okay. So we'll probably hit that tonight. Eventually a new fib will form. See if we'll get a correction then. See if the momentum slows, right? Now, if I was looking to initially take a trade, if I haven't been short from a higher level, and my rules tell me that I only can look to short this if it hits my zone. It didn't hit my zone. So you know what? Then he doesn't take that trade. Because your trade rules and your trade plan are designed over time because that's what gives you an edge in the market. So if you have a plan that gives you an edge in the market and you choose not to follow it, it usually doesn't end up too well, right? Because now I take this trade off the 236. And then I get bounced. Right? I get bounced. I went against my trade plan. Okay. So this type of momentum, these last two fibs, even if I'm short, right? So short from a higher level, okay. Initial move, initial high price. If you get short and you say, you know what, Benny, I've been in this trade from when it started breaking trend lines off that daily and weekly resistance level, boom, there. Okay. So yeah, you had a couple opportunities here to add to your position. Because why? The pullback on this fib would have met your rules. Okay? Pullback on that fib would have met your rules. But here, no pullback. That meets my rules and my criteria. So I'm not going to add a position. Here, hasn't met my criteria. I'm not going to add a position to that trade. Right? Uh-oh. I'm not going to add that position because it didn't meet my rules. It didn't give me the high price that I was looking for in my zone, so I don't take the trade. You want a rules-based system. It's what keeps you safe. Because if you stare at the charts long enough, everything starts to look good, right? And you don't want to get caught in those positions as a trader. You become overexposed to the market in a hurry. Any questions on that? Any questions on the NZD CAD? We're just bearish, right? Making our way down. Next support, daily support level. All right. So that's it. Bearish. Okay. We're bearish, looking for possible pullbacks to get involved. NZD Swiss kind of just dancing all over the place, right? It's holding at this level, though. I know we marked this up. Was it earlier this week? Just drew out the zone from the weekly. Okay. Commodity currency versus a safe haven is not performing too well as a safe haven, but we've got this drop off. All right, we'll see if it holds or if it wants to continue to push down through this zone here. Past resistance becoming future support potentially. All right, this is from the weekly time frame, potentially. If not, you look for a push down and potential double bottom. Now, this has been dancing around for quite some time in this zone on the daily. Up ABCD boundaries. Look at this huge correction to your 786 zone up against daily support. Pushed up and now we're pulling back. So it's kind of just bouncing around. We may see price push down for a double bottom. Don't know. Depends on how long we're going to stay in this risk-off situation. As long as we're in the risk-off situation, your commodity currencies are typically going to stay to the south. All right. So we may see this continue a further correction to the downside on this. Look at how this is working out. Okay, so look on your 4. Here was the push up that we just saw on the daily, and now look at this correction. Okay, we're still hanging in the AB boundary for now. All right, but we may just continue to move down and take this A out. So it's just a matter of whether or not. See, if we go back here, this is the same area. See, this is the same area that we're fighting right now. Okay. So this would have to hold, take out the high, and break back above 63,141 for me to even be, and a strong look at the fundamentals for me to bond to the fact that this is now ready to get long. All right, so this is a wait and see. This is a wait and see. It's in the key zone, key area, but we just don't know. We just don't know yet. All right, any questions on the New Zealand Swiss?
Which one is the safe haven?
Swissy.
Okay, thank you.
Mm-hmm. You're welcome. In New Zealand is your commodity currency. The number one commodity for New Zealand is dairy. Okay, they supply a lot of dairy products around the world. So initially, when inflation first hit and the war first hit, commodity currencies held up. Right? Because for a certain amount of time, people just don't absorb it yet. Right? They haven't been to the gas station enough to look at your gas tank to fill it up going from $40 to $80. They haven't seen that enough yet. So people are still buying. So even though the price of milk was going up, right? The price of other dairy products was going up. People were still buying. Supply chain price going up. People still buying, right? So your commodity currencies benefit from that. But now the longer and longer things go on, the higher and higher inflation goes, pocketbooks start to tighten. Corporations start to get concerned. They start to to take another look at their budgets and say, hey, do we want to start to contract that budget a little bit, right? Spending can slow down, right? And so this is why now you see the commodity currencies is back to that traditional kind of risk-off mode. Commodity currencies usually take a hit. And typically your safe haven currencies will see an increase, right? Like your yen, you see those yen pairs are corrected to the downside, okay? So this is where we are. This is where we are. So we're wait and see. It would be, I would love to see a swing to get back long and things to start to normalize, because we know in New Zealand, they've been they've had multiple interest rate hikes as well. You know, to try to curb. But hey, we'll see how it goes. All right, that's your New Zealand Swiss, NZD-JPY. Okay, another correction. Look at that. Woo. That's a pretty U-turn off a weekly resistance. Gotta love it. Gotta love it. That's down what off the top, off the high. 544 pips to the downside. All right, again, we're through the 382 on this one. Look at that swing. AB boundary, swing. We know the market loves to fulfill that 382. Either right away off the beat boundary or at the shadow retracement and after a push up to that 118, 127. We got a pretty much an immediate reversal off of that. There's your down move. All right, we eyed it up over the weekend. And now look, with the fib, what does that down move look like on a lower time frame? Well, looks like ABCD waves. Okay. This is where we are. So now it's just a matter of, hey, we're coming around this sweet spot at the shadow retracement. Will it give us a high price? Do we want to buy back to that high price eventually? Or do we want to wait for the high price and continue short and roll with the trend? See if we can get a deeper correction down to that daily support. All right. ABCDs, the market moves up, down, and sideways. You're welcome. All right. It's primitive. Our complicated brains tend to make things super, super duper complicated. But the market is primitive. Up, down, sideways. That's it. All right. And that's the NZD JPY. Any questions on that? There's your swing down. Okay. And we do this and we go at this night after night after night after night. So you can train your eyes, so you can develop the spatial intelligence, so you can get the repetition. That's what's the key to this thing. None of it's rocket science. It's seeing it enough. Okay. So here is your spin off. Here's your daily candles overlaid on your 4-hour chart. There's that swing. There's that swing to the downside. Okay. Just smaller waves playing out. That's it. That's all you're seeing. All right. NZD USD. Okay. What?
Sheesh.
You know what I mean, Ryan?
Man. Beautiful.
Look at that down push zone. 732 pips. It's almost 1,000 pips. Look at that. Got perfect weekly and daily 1.618 the extension alignment. Here's your 4. Look, just a smaller wave, everybody. See it. You got to see it. Patience is going to take a while to develop. Doesn't happen overnight. Doesn't happen overnight. Still one of our biggest challenges after all these years. Okay. ABCD waves, clean moves. Look, write that one down, everybody. Write that one down. You got a new AB boundary on the 4. So what do? We either pull back immediately off that B boundary, or we push down, and then we potentially get a pullback. But if I'm selling, this is my initial sell opportunity. If I'm looking to say, hey, I'm staying with the trend, here's that D extension. But hey, if I can get a deeper pullback to a high price, then get short. I don't want to short from there. I want a high price to get short. You may not get it. You may get it to hit. And that's cool because then maybe you get a pullback after that. But we want a high price to get short, or we look to buy back to the high price if you're counter trend trading. right? Now, I know people say you shouldn't do it all day, but we do it all the time. Market moves in waves. You can be successful trading either way or both. Just depends on what you like, really, what your preference is. The key is learning how to frame the market out to spot the opportunities. With the VDC move, it is an automatic trigger to wait for the trend line break. Yeah, it can be. Yeah. When that started, I would say it can be, it is. Right. If I'm looking at short, for example, here, if I'm looking at short and I'm getting to my zone, absolutely. Right. Put a trend line on that bad boy. All right. Depending on how aggressive you want to get. I'm put the trend line on there, get a break if you're looking for that extra confirmation. But the key is and you don't develop it unless you put the time in and you work at it. The key is to do your best to develop an overall bias for a particular pair. All right. That's the starting point. Because that bias is going to say, this is my direction. And then the rest is just, hey, risk management. Do I want to buy the BTCs on the counter trend if my bias is down? Do I want to wait for high prices and sell to see the Ds? If you look at a chart and you feel like you can't determine the bias, keep it moving. Keep it moving. Don't worry about it. If it's whipping back and forth, if it's just moving sideways from left to right on your screen, and it's not moving from the bottom left to the top right, or the top left to the bottom right, leave it alone. If you can't get your eyes on it to find out what the direction is, just move past it. Because most likely it's a choppy market anyway. And just be patient. Right? Like you see with these moves and how large they are, right? You don't need to trade, right? Every single day, every hour on the hour. These are huge moves. More trading doesn't equate to more money. There's never been a direct correlation there. Okay, and I know a lot of people, high frequency trading, all of that, never been a direct. That's just more transactions, more broker fees, more exposure to the market, more opportunities to get you behind handed to you. You don't have to do that. This is not how many widgets I could put together in an hour. We're up here in Detroit, home of the assembly line, right? That's not what this is about. This is different. This is different. Okay. So any questions on the NZD USD?
JC asks, with the B2C moves, it's an automatic trigger or wait for a trend line break?
That's why I was I saw that. That's why I was that's why I brought that up. Yeah, because I saw it. Yep. Yeah, the trend line break is just added confirmation. We know there's times where I like to trade before all these different variables came into the market. I typically would just set limits at those levels and put my stop above the A and let it do its thing. I usually would put a limit here and a limit at the 786, right? Sell limits. In this case, would be a sell limit. And if it moves up and hits the target, right, I'm looking for it to move to the downside. If it does, great. If it doesn't, I'm out 0.5%, I'm out 1% on the trade if they hit the stop loss. All right. But I've added additional confirmation because of there's a lot of things going on in the market right now from day to day. Sometimes you don't know, but for the most part, the sequence is held true. Ryan, anything to add?
No, sir.
All right. Any other questions overall on any of the pairs that we covered?
Hey, Benny, it's JC.
Yes. JC.
I got a question about risk management. I did my calculations on a pair, and I did it out like how we got it on the module. Give me just a second, sorry. Sorry, it was an airplane. But so I did my calculations and I got a lot size that was like 0.02. And then I divided my risk amount by my pips. And it was like my risk was like $4 and my pip stop loss was 158. And it was saying that my risk would be, or my drawdown would be something. It would be like 50 cents, but in actuality, the drawdown was like $5. So I was trying to figure out if I had like a decimal point in the wrong place or I'm calculating wrong, but it wasn't the right calculations.
No, you should have been at $4. You said 158 pips.
Yeah. And I was in drawdown for like 57 pips and it was a $5 loss. It was a $5, like, you know?
Yeah, if you do that, that's 20 cents, right? Times 158 pips. Let's see. Oh, and it's some change. Hold on. Oh, it's 0.25. Yeah, so you ended up, it could have been like 25%. But let me see times. Yep, that's because you came out 0.02, but you see the numbers after it, right? So you could have, it could have been 25 cents. You could have rounded up to 30 cents or whatnot. So you came in under, right? Or you came in over. So you traded did you trade at 20 cents?
My lot size, I put in 0.02.
Oh, 0.02.
Mm-hmm.
Yeah, 20 cents. 20 cents.
Yeah. So what she's saying is, based on her calculation, her total loss based on the 150 pips stop loss should have been $4. But after 50 pips, after 58 pips, her drawdown was $5. So she's trying to understand where she might have went wrong.
Yeah, I don't know. What were you trading?
It was a GU position, but I ended up closing it out.
Ryan, what you think on that one? You said your loss was $5?
Well, that was a drawdown after like
Yeah,
57 pips or 20 pips or something like that.
What was the spread? When were you trading?
Hold on, let me look at my log real quick.
That's a good question too.
Yeah, that's weird. Shit. Were you trading at a time where the spread was through the roof? Yeah, I'm somewhere doing the math in my head. I'm like, no, that should be right on. Somewhere around there. Around 25, 26 cents, something like that. It's what it comes out to. So it depends on whether you want to trade between 20 and 30 cents, really.
Hey Benny, can you hear me?
Yep, I can hear you now.
I entered yesterday and I think it was London session. But then I ended up closing it out last night.
Yeah, that's weird. I mean, I wonder if it was a spread issue. If spreads were boosted. Sometimes around, major announcements, brokers boost spreads going in and out of sessions. Sometimes spread gets boosted. It depends on your broker. But that's weird. You were at 56 pips and it was down. You were trading at the 22. You trading at 2 micros, right?
Yeah.
0.02.
Yeah, that's weird. That's weird. So I can't answer that
don't
one
add up
for
to
you
me
more
either.
directly. Yeah, that's strange. Yeah, that's strange. I just worked that forward and backwards. I still can't figure out besides a super high spread or something crazy, that was going on during that time. Sometimes it's definitely the time of day, and what's going on event wise. Sometimes they boost spreads ahead of events, so you always have to watch out for that. You did it come out of London. That's weird. That's weird. Yeah, I'm sorry I can't help you more on that one. Yep. Any other questions before we close out?
I want to reiterate to our new folks,
Mhm.
Coming into this space, most of the time, you're given the impression that you're going to be able to learn this skill fast and you're going to be rich yesterday. You're not going to hear us tell you that here. We're going to tell you that it takes time, effort, and energy to learn this skill, to over time become consistently profitable, right? So as you're learning, as you're going through the training, take your time, follow your path to learn each module. Take the time to go through each step in the process until you understand it. And if you don't understand it, bring the questions here to these live sessions so that we can answer them for you. You're not going to get rich quick. Learning this skill takes time. Benny's been at this since 2013, 2014. I've been at it consistently since 2015, 2016. And it's taken time for us to get to where we are, right? So if you're in the space for 2 months, 3 months, 4 months, and you're not getting it yet, that's okay. That's okay. Like I said, there's no such thing as perfection. It's a fallacy. You're going to lose trades in this space. That's a reality because we don't control the market. But the thing that you have to understand is you have to take your time to go through the training so that you understand each step in this methodology that we teach. And then you have to create specific rules that you will work to develop the discipline to follow consistently. You can't be a consistently profitable trader without consistent rules that you follow. Right? It's just like the assembly line. If the assembly line didn't have specific rules that it followed in a consistent process, your car is going to come out looking all kinds of different ways. Same thing in trading. You have to have a consistent process that you follow. You can't change with the wind. You can't change based on what somebody said could potentially possibly happen. Right? But you have to take your time and go through this process. Understand why you're coming into this space, not just the dollar figure, but what is your true motivation, what's your purpose, your mission, your cause in life, and how does learning this skill help you achieve that? That why will help keep you directed. So when things do get difficult, because they will, you'll have something to fall back on and something to ground you that'll keep you moving. Extrinsic motivation, dollars, that only last for so long. But you have to find the intrinsic motivation that's going to keep you pushing through the difficult times that will come. It's not an if, but it's when difficult times come, you have to have something that grounds you to keep you moving through, right? And you have to be willing to work through those difficult things, right? Some of those difficult things are going to be personal experiences that you've experienced in the past, right? In our Mindset Monday sessions, we talk about self. We talk about how you can work through your old self to become the next best version of yourself, and what that process actually is. Because it's a process too. This trading space is a direct reflection of you and the characteristics that you have and the things that you learned from your past. So as you grow as a person, so will your trading. But you have to be willing to put in the time, the effort, the energy to ensure that you have the best potential outcome as you move through the process. It's not going to be the easy thing. It won't be. Discipline isn't easy. Changing the neuronic connections in the brain is not easy. It's worth it, but it takes a crap ton of time, a crap ton of effort, and a crap ton of energy. But if you're willing to put in the work, the outcome can be a beautiful thing. You'll be able to impact the world, your family, and the communities that you desire to put yourself in amazing ways as you grow as a person. At the end of the day, that's what this is all about. So don't expect to get rich quick. Don't expect to hear me, Benny, and Casey tell you that you will, because you won't. That's not the Lambos and the mansions that are flashed on YouTube. It's not consistent. It's not something that can be replicated consistently over time. So wrap your mind around being in this journey for an extended period of time, right? Be okay with that because that's what it is, but it's worth it in the end as you continue to grow as an individual. We appreciate you guys for being here, man. We appreciate you guys showing up and doing what you do. So thank you.
All right, that's a great way to wrap it up. Well said, my friend. Hey, we'll see everybody 6:30 a.m. Eastern Standard Time. We'll turn to the charts for the pre-New York session. Have a great night, everybody.
Good night.
Good night.